All right, what's up, guys? Welcome to the Hustle Podcast. We're doing episode 3 today. Very excited, massive upgrade from the first 2 episodes.
For sure.
Today, we're going to make it very simple. We're going to talk about wholesale lending and what that actually is, and share a little bit about our experience here working at the company, theLender. And I'm going to be asking Gabe some questions because he's been in the game for over 2 decades on the
Yeah.
retail side. And I don't want to say too much. I would love for you to take it away and share your story, man, about the being an AE and
Yeah,
also
for
being
sure.
a loan officer. So
Yeah,
first and
100%.
foremost, let's start with for you, Gabe. Like, what is wholesale lending? What is
Yeah,
that?
yeah, and I
Yeah.
think, the answer to that is going to be, wholesale lending is what it is, not just for me, but generally speaking. I'll give you kind of the rundown, right? And if you could look at it from a perspective of, going to a purchase anything via wholesale, right? You are buying from the source, essentially directly from the source. And when you're purchasing something from a retail perspective, you're going to a distributor, like a grocery store, right? Ralph's doesn't make all the products in their grocery stores, but they get those products and purchase those products at a wholesale price from a wholesale manufacturer, distributor, so on and so forth. And so when you look at the lending and banking verticals, how it works is as follows. When a consumer like you, John, when you buy a piece of real estate and you
Mhm.
want to finance a portion of that purchase, you go to a loan officer or a mortgage broker or lending company, and that lending company is going to treat you like a retail customer,
Right.
as if you were walking into a Walmart purchasing something. And that mortgage company, that loan officer, that mortgage broker is then going to provide you
Mm.
with a loan that meets your needs. And they get that loan funded by a wholesale bank. So
Mm.
follow me again from the perspective of purchasing something from a Walmart or a Ralph's grocery store, and that grocery store or supermarket purchases that product and resells it to you and gains a premium.
Mm.
Well, the same thing comes to play in the banking industry, right? And there's a couple different levels and realms, but at the face value, when it comes to wholesale lending, we at theLender are the money source for loan officers and mortgage brokers to have their consumers' loans funded. So, from the point that Joe and Mary go see Bob the broker, Bob the broker then contacts us and looks through our products to see if our products fit their consumers' needs and if we could fund a loan for them to be able to purchase a house,
Right.
refinance a house, or get a home equity loan on their property. So that's kind of like the long and the short of wholesale lending. Does that make sense? Do you have any
Yeah.
questions?
Yeah, it makes a lot of sense. I guess from your experience though, I know you mentioned a couple of times you've been in the retail side for
Mhm,
mortgage lending for
mhm.
what it was since oh
Couple
03,
decades, oh three,
couple
yeah.
decades, okay. And then now you've been here as an AE on the
Mhm.
wholesale side
Yeah.
for what was it again? February
Beginning of this year, beginning of 2025.
2025.
Yeah.
Okay. I guess for you, like what made you make that shift from going from, hey, you know what? I love retail. I've been doing it for quite some time, made great money, but I see that it makes more sense to be an AE now working with the lender, right? Or
Yeah.
just in general,
Well,
right?
that's a good question. And, I don't think it's really a matter of what makes sense or what made sense,
Hmm.
but more a matter of where my passion lies, right? And really following my passion and doing something that I love.
Mm.
And doing something that I love, or what I love doing rather, is I love problem solving. I love helping people. I love serving. I love being of service. I love adding value. And when it comes to the needs of a mortgage broker or a loan officer, there's been many instances where, as a retail loan officer,
Mhm.
I didn't feel like I got the support I needed from account executives at wholesale banks I worked with.
Right.
And it was almost a make sense thing for me to transition into a role in the wholesale banking realm as an account executive.
Right.
And it just, yeah, it made sense. And it's something I love doing. So it really wasn't a matter of, uh, you know, why the switch, or what's better, this or that.
Right.
It was more a matter of, following my passion, and what made me
Passion.
come alive.
Right. Right. Okay. Thanks for sharing that.
Sounds corny,
And
but it's true.
that's corny as shit. Just kidding. But in terms of, from again, right, you've been in the game for quite some time. You've seen both sides of the aisle,
Mhm.
right? The retail side, the wholesale side. And I guess for you, like when you think about the mortgage broker's perspective, right? They're working with different wholesale lenders. They're trying out different companies, seeing different rates, turn times, and whatnot. Like, what are the common issues that mortgage brokers run into when working with a wholesale lender? And I guess for us at the lender, why would people choose to go, or brokers go with us as opposed with other companies?
Yeah,
Yeah.
it's a really good question. So, in the lending realm, it's all about getting the loan funded,
Yeah,
right? We want to get the loan funded,
that's key.
and there's a couple of different items that come into play when getting a loan funded is the goal and objective, right? So first and foremost, you have to make sure that the loan fits in to the loan program guidelines,
Mm.
right? And in the non-QM world, it's there's it's a little bit more colorful than in the QM or agency world, and I'll just kind of elaborate on that really quick without taking a deep dive. So you have your agency loans, which are your conforming government backed loans by Fannie Mae, Freddie Mac, FHA, USDA, VA. Those the guidelines for those loans are a little bit more black and white with minimal gray area. Whereas not in the non-QM world, these are loans, and these that are essentially being funded by pools of investors, and the appetite of these investors determine the guidelines of these particular loans based on their risk tolerance and data points
Mm.
that they've accumulated, and determine that if they create this, let's say, polygon of guidelines for loans to fit in, they will have made a profit. And so when it comes to the non-QM world, there's a sea of investors out there that invest in mortgages and mortgage notes, right, and real
Mhm.
estate. And so in the non-QM world, the thing that's most important from a loan officer's perspective, or even a wholesale lender's perspective, is just, again, making sure the loan fits in the guidelines. And with us at the lender, with our guidelines and our matrices and what we allow, the risk tolerance level is a make sense risk tolerance level with a little bit more of a risk averse position on certain guidelines and criteria. So, like, say for example, we were one of the first lenders to come out with a down payment assistance program backed by an FHA loan,
Mm.
quite a few years ago. And on the retail side, I actually funded a loan as a retail loan officer, a down payment assistance loan with the lender, and it went great. It was actually for a family member. It went awesome.
Yeah.
Not only that, we were one of the first wholesale lenders to allow investors to use rental income on an ADU to qualify for a DSCR loan.
Right.
When it comes to reserves, whenever someone is purchasing a property, the reserve requirements are minimal to nil on different LTV criteria, right? And so there's some scenarios where if you're buying a home on one of our non-QM products, you don't even need to have reserves. Cash out can be used as reserves. So
Right.
if in our matrices there are reserve requirements, you can use cash out, and you're doing a cash out refi, you could use that cash out as reserves to meet to meet the criteria. Another thing, no seasoning on cash out refi.
No
So
seasoning.
you know,
Yep.
if you buy a house and you put a good down payment and you want to refinance it in a few months to get some money back out, you could do that. There's no
Hmm.
seasoning requirements, and you could use the newly appraised value. And so there's these little nuances that we are able to accommodate, that allow us to accommodate loan criteria that other lenders can't accommodate, because maybe they're asking for a certain amount of reserves that the borrower currently doesn't have. That's the reason they're getting the cash out. They don't have the money.
Right.
That's why they're getting the cash out. And so we figure, hey, this makes sense. They're pulling this cash out. Let them use it for reserves. Oh, you have someone renting that ADU, and you can prove that the market rents are justifiable. Yeah, that
Mhm.
makes sense. Let's do it.
Right.
Had another scenario. There was a loan denied by a big lender, and if I said the name, you guys would know it. I'm not going to say the name.
Yep.
And this loan, it was a delayed financing loan, which is where a borrower buys a property, and they either buy it cash, or they put a large down payment, and they later want to take some of that cash out of the equity and put it back in their pocket. Well, there was a scenario where a borrower's fiance took it was like $1,060,000 out of a line of credit that they had with the big bank to gift to the borrower to buy the house. And so after the fact, the borrower wanted to refinance at 75% loan to value ratio to pull a portion of that cash out to pay down the fiance's line of credit. Well, this other big lender, they denied the loan. They didn't want to do it, but it made all the sense in the world.
Right.
So we were able to take that loan, and we got that loan funded, and we got that loan done. So again, make sense lending, but also in the same token, there's other scenarios where we had a purchase scenario, 621 FICO, FHA,
Mhm.
borrower had multiple collections and charge-offs. There's about six derogatory credit lines of credit,
Right.
and out of those six derogatory lines of credit, there were three charge-offs and two collections. Three charge-offs and two collections. The loan did not get a approve eligible. It got a refer eligible, which means we're able to manually underwrite. We do manual underwrites down to a 580 FICO score. This was at a 621 FICO score. So we were able to get that loan approved and funded. It was a tough loan, had a lot of
Mm.
hair on it. There was multiple letters of explanation for the derogatory credit that we had to draft, um, and it was a tough deal, but we got it done. So, and I mentioned that to also mention that even if there's an agency loan, an FHA loan that we need to fight for, we need to go to bat for, we need to have conversations with underwriters, and look at things from a make sense perspective and chart a path to that. That's what we do, and that's how we partner with our mortgage brokers, our loan officers.
Yep.
It's a partnership. We're not necessarily selling a product or service. We're embarking on a journey to grow business
Oh yeah.
and to be an asset.
Like build that business relationship as opposed to just transactional, right? We're mostly
Mhm.
relational because we love to like we're the kinds of people like as AEs, we're here to provide value. We're here to give,
Yeah.
right? And that ties in with our second podcast, right? You guys should listen to it. Um, but yeah, other than that, before we wrap up, last question for you, Gabe.
Mhm.
To all of our viewers, right? If you're a mortgage broker, you're watching, what would you say to a mortgage broker that's on the fence of working with us at the lender?
Yeah, and
Yeah.
I would say one, I'm coming from the other side of the table, being from that perspective. One, I understand where you're coming from. You get we're all creatures of habit, and we get used to reaching out to the same banks, and it's
Mm.
typically because we have that relationship. So here's what I'd say, and this is what a lot of my top AEs when I was in the retail side did turn my business. Um, they threw us a bone. They kept throwing us the tough deals, and any deal that didn't work with your top three lenders, send to us. Just give us a shot. And
Oh
then
yeah.
also another thing to do is, hey, just any loans that you have with other lenders, approved, not approved, getting ready to submit, just price them out with us, just so you know.
Yep.
There's no commitment, there's no harm in taking an extra like 5 to 10 minutes just to see, what the pricing and the guidelines and the structuring of the loan might look like with us. Um, Give us a shot. No harm, no foul. We'll if you deal with us directly, we're obviously going to do everything we can to get your loans funded to get the answers that you need when you need them.
I love it. All right. That concludes our podcast for episode 3, guys. Thanks for tuning in. Again, it's going to get better and better every single day. Again, this is our 3rd day doing it, and we already have the video set up, right? We're in the whole podcast room. We're going to have way higher quality camera, imaging, video, and also audio. So stay tuned, and I'll see you guys tomorrow. Appreciate it, bro.